All right, let's kick it off. Mark, good to see you. Thanks for joining us today on this live webinar to talk about the market volatility that started on Monday. How you doing today? Okay?
Doing great. How are you?
All right, doing great. Thank you. So so Mark, my main goal for this particular webinar was to really educate our audience to help them understand exactly what happened, right? So obviously, this Chinese entrepreneur started the business in 2023 called DeepSeek, and DeepSeek, which he built in a language learning model that apparently did it at a lot faster time frame, which was 2 months at a lot, apparently a lot cheaper cost, which was around 5.7 to 5.8 million dollars, and used 2,048 GPUs as reported versus, as I understand it, Llama's Meta language learning models took about 100,000 chips, right, or GPUs, and which cost, north of $3 billion or even more than that, right? So everybody's spinning their heads and they're saying, oh my goodness, like, how is it possible that DeepSeek was able to do this significantly cheaper and much more efficiently? So that's the main question, right? So now because of that, on Monday we saw tremendous volatility where we saw some stocks like Nvidia, for example, down 19% and many others. And we saw a little bit of recovery on Tuesday and a little bit more volatility yesterday. And as we're speaking today, you got Nvidia down around 3%, Amazon down 1.5%, and you have Microsoft due to their earnings down 6%. So I want to ask you, first of all, DeepSeek was around since Christmas time. So what changed from Christmas time until literally Monday morning?
I don't have the best answers. I think there's more than one version of DeepSeek out there, and I think what happened, and I'm not 100% in the history on this, and I wish I was, but I think there's there's the V3 version of the model, then there's like the R1 of the model, and I think uh, they released different versions at different times, and so I think what happened was it was the one that's the R1 version is the one that's I pretty sure that did not come out at Christmas time. I might be wrong on that, but I think it was when the model came out. Uh, Sometimes it takes time for people to get all the testing done, but
Right.
the results are coming out that it's equal to the O1 model from OpenAI, and in some places even exceeding. I think on a certain math reasoning test is actually superior to O1, and also on a certain coding benchmark, it's appears to be marginally better than O1. And it's also not clear that their claims on costs are are 100% accurate.
Right.
And this is where it's what do you include in your costs? So you include in the costs all the work you did prior to that last training run, and are you just looking at the cost of it took this much time on to build a model, and this was electricity, but I'm only using the cost of the GPUs for that period of time, not the cost to build the entire cluster. And there's also some speculation that they're using a bunch of H100s, which they're not supposed to have with our export restrictions. And it is interesting that if you add up China plus Taiwan plus Singapore, from the revenue from NVIDIA, it significantly exceeds that of the United States. Even Singapore itself is about half of the revenue of the United States. So is there some leakage of H100s into China that should not be there? Possibly. We don't know. NVIDIA says, of course, that's not true, but I think once it moves out into the wild, how do you track it and control it? So I think it's there's a lot of gray area there. What seems to be
So
pretty
Mark,
clear though,
I want to
yeah.
just interrupt you there real quick. So the gray area is so we understand, right? So DeepSeek, they're saying that they only use 2,048 GPUs and not the H100s. The H100 really is the cream of the crop of the chips of NVIDIA. And the government, the Biden administration, stopped NVIDIA from selling them to China.
Yep.
So we're saying you didn't have access to these H100s. How were you able to do what you were able to do? And many people believe that the information could be a bit murky, that maybe they did have or bought these H100s in the black market and used it to build out DeepSeek. So the bottom line is that it's we, I guess, as Americans, we're unsure if in fact they did what they said they did, which, like I said before, which is build this at a lot cheaper cost, a significantly cheaper cost in a lot quicker way. So when everybody's just speculating right now. Nobody really knows that. So I guess in the meantime, Mark, the volatility of the market that we've seen, especially Nvidia selling off 19% from its high, is would you call it speculation? Because we really don't know definitively if, in fact, DeepSeek is telling us the truth.
I think there is something real there that's non-trivial. And so let's and let me unpack that. So there's certain people out there. The CEO of Scale AI said, "No, these guys got 50,000 H100 chips." Well, when you compare that to the multiple hundreds of thousands that Microsoft's buying and what Meta's buying, they seem to have pushed the ball down the road a lot, even if they were using 50,000 GPUs. And Elon Musk retweeted the tweet from the Scale AI CEO saying, "Yeah, of course, this is what they did." Now, what I will say is a very credible person, CEO of Grok, has a very good video, and I will share with you the link. And I think everyone should watch this video. It's a very good YouTube video, and it was put out yesterday. And what they're saying is what they actually did is real at DeepSeek. But what they did is they're standing on the shoulders of OpenAI. What they're using is they did a process called distillation. They
Right.
use the answers from OpenAI as better quality data by which to train their models. So they did something that was actually very intelligent, very elegant, and produced a model that's as good, but they were using other models, the answers from models that people built the heavy lifting way to create something with a very little bit of increment of money that performs equally well, but costs a lot less money to build because
Right. So,
you're using the high quality answers from OpenAI.
right, Mark. So that makes sense. So if they did use distillation, is that legal?
Um, it's I don't know if it's legal or not. I really don't know, and it's not clear if it wasn't legal how you would stop it. How would you stop the creating of
Right. Right.
spoof accounts? It's like people like to take data off of LinkedIn, and LinkedIn always tries to block the bots, and there's always a back and forth. So the question is can you stop this going forward? The interesting thing that the CEO of Grok said, he goes, you're not going to be able to stop it. So what OpenAI should do is just open source their models because they can't stop it. But this way they would protect their brand and then try to figure out how to build the value add layer on top of what they open source. So I'm not sure if it's legal. I think we're still early in this process of figuring this out.
Right. So, okay. So now we talked about how this whole thing evolved, right? The next part of this really is, why do markets care? And why was there so much volatility? Not in just the tech space, you saw volatility in utilities. So,
Well, the perception is that with these types of techniques, you could be able to get increases in model quality without the idea of throwing massive amounts of GPU capex and as a result, huge amounts of incremental electricity power to get gains. And by the way, it's many ways this is a crystallization of something that was already in the works. Uh, One of the top people from OpenAI was this who has recently left. This guy Ilya Sutskever. I really butcher his last name. He gave a presentation at NeuroNips. It says NURIPS. I don't even know how to pronounce that either. But this was back in December of 24, and he said, "Hey, scaling's over. If you think that by spending 10x more on your next model is going to yield you a significant improvement," he was saying that that's kind of broken. And so that was kind of out there as an idea mid-December. I think that was like December 14th when that came out. And I think what we saw here with DeepSeek is reinforcing to that. So what that means is that before you had this idea of, well, we spent hundreds of millions of training the models in 2023, 2024 vintage models are cost $1 billion or so to train. 25, 26 models are going to be 10 billion to train, and beyond that, 100 billion to train. And so as an NVIDIA investor, you're looking at that going, wow, this is great, but it's only going to get better. And now that roadmap of just throwing a lot of GPUs at it, lots of data centers, enormous amounts of power, we may be, it doesn't mean you don't eventually get there, but we may go sideways for a while before getting back onto that slope. And that is what caused the stocks to go down, as well as the utility stocks and, things that power, these next gen nuclear SMR stocks came down, fuel cell stocks came down because they're perceived to be benefiting from the power shortage. So it's the idea of spending always 10xing the amount you need to spend on training. That may not be as significant as a ramp as we thought, and that's what hit the stocks.
Right. So which totally makes sense to me. So when you think about it, just logically speaking, if let's take Microsoft, right, who spent billions and billions of dollars purchasing these chips from NVIDIA as an example, they may just have enough chips now to satisfy whatever they need over the next 3 to 5 years, and may not need to purchase anymore. We've been talking a lot about this build out that many people were spending money on. We knew they were probably overspending. In fact, we were concerned at first half of this year, you could see a slowdown on earnings announcements on many of them saying that, and you're not really getting a return on the investment spend on AI that many were getting. And now with DeepSeek, where you don't really need as many chips as you thought you may need. And on the utility side of things, spending money on data centers to build out and all the power that everybody thought was needed to run AI now is going to be much smaller than we anticipated. I mean, that's tremendous news. And
Well,
so,
but
right?
the thing is, we want to be it got to be a little more nuanced than that. Um, what we need to spend on training may be a lot less. Ultimately, this may increase demand significantly because this sort of techniques may take the cost of running the models down by a lot.
Right.
So if you can get a very high quality model with but the cost of running it is reduced by a factor of 5 to 10, then the rate at which we deploy AI, so to think of AI, there's two things. There's training the model, and then when the model's done, and then you run it, that means that you're opening up to the world for people to ask questions. That's called inference.
Right. Right.
So this may accelerate inference spending by a lot because if the models are suddenly smaller, cheaper, more versatile, then you can accelerate that we benefit from it. Now, the way to look at the world, though, every time value is created, how's the pie get divided? Right? There's the people that make the chips, people that build the models,
Right.
people that build software on top of the models, and end users. I would argue as we shift towards a more heavily dominant inference world, I think almost everyone in that pie benefits, but the person making 80% gross margin on the chips may not benefit. And so we think that is the move towards an inference dominated world, which we think DeepSeek is going to accelerate, is mixed news for NVIDIA to negative news.
Right. So Mark, so the purchases and all the hardware that was needed to get this AI boom going, we could argue that, a good part of that has been accomplished. And the next phase of this, like you said, because I mean, the good thing about DeepSeek is there'll be more and more LLM models out there, more and more usage of AI. So that's a positive thing for applications, and even a positive thing for cloud businesses, which I want to get into with you in a moment. But I'm just trying to lay the foundation. So let's say a hardware spend can be a lot of that will be less than what we're seeing, or at least the growth on that will be a lot less. So if we move now to the next phase of this, which is the inference.
What I'm saying is the hardware spend growth may be there. It just might be much more competitive
Correct.
with more players in it.
And
But
not, and
the
not as
but
much. And
the
not as
but
much.
the this yes. Yeah.
Right.
The spend
And not as
this
much.
yeah, the spend can actually the rate of spend growth may go up. The rate of spending on training may decelerate. And that's where NVIDIA has its quasi-monopoly in training. They do not have it in inference. And that's the thing that people are starting to digest, I believe.
So Mark, so what companies can you give us an example of companies that focus on inference and could increase sales as a result of inference?
Uh, well, look, a great example. Datus raised money. I'm pretty sure it's a $9 billion. And by the way, everyone
Who
can
raised money?
try.
I'm sorry, who raised money?
A company called Perplexity just raised money in a $9 billion
They're a private
valuation.
they're a private company.
Private
Yeah.
company. Now, the interesting thing about Perplexity is, first of all, I love it. It's great. Now, they started out as a company that they were using OpenAI. And then they started using also Anthropic's models. So they were not model builders. They're like, well, what we're going to do is figure out who has the best model to answer this question. Also, we're going to keep track of all the questions. So if someone asks a similar question, we already have an answer. So what they would tell you, Perplexity, is their query growth is like this. The amount of money that they spend at on OpenAI and Anthropic is growing at a lower rate, and that delta is going to be their margin. Now, and that was true before DeepSeek. Now, what happened this summer? There's a very high quality model introduced called Llama 3 by Meta.
Right.
And we saw these really great performance numbers on Llama 3 on non-NVIDIA hardware. And it was just interesting. One of the companies, which we have an investment in, they filed to go public, it's called Cerebras. And Cerebras said, look at these, we've got 5, 10, 15 times the performance versus NVIDIA running Llama 3. And when they announced that they entered the inference market, they had a quote from the CTO of Perplexity. Now, I don't know if Perplexity is doing this, but I can almost guarantee that they have internally, they're using other people's hardware on Llama 3, which is open source, because the cost per query is cheaper. Now, it doesn't mean they're only going to use that. When they get a query and they'll go, OpenAI is probably better at answering this question, and Anthropic's better at answering that question. But for this question, we can use this open source model on very cost-effective hardware and take our cost per query down a lot. And now DeepSeek's out there. And guess what? Perplexity yesterday said, we're using DeepSeek. So, well, where are they running it? On whose hardware? They haven't disclosed that yet, but it wouldn't surprise me that it's running on either Grok or Cerebras or both, because they have now a really great quality model. And if you go to artificial analysis, you can see what DeepSeek was charging people. They were charging, I think, for the R1 model, like $3 per a million tokens. And that is a vastly lower price than
Right.
what OpenAI is charging. And that's what DeepSeek's charging themselves. But now there's an open source model. It can run, so I think Grok announced their pricing yesterday, and I think they're $1 per million tokens. Cerebras, and by the way, that's a 275 tokens a second, which is much greater performance than what DeepSeek was providing, running on NVIDIA stuff. I just saw literally a half hour ago, Cerebras announced, well, we got DeepSeek running, and it's 1,200 tokens a second. They haven't announced, I don't know if they've announced pricing yet, but what we're seeing is that you now have equivalent quality models to OpenAI's o1, but perhaps at much lower pricing. That's if you're a software developer, that's manna from heaven. That's great.
Right, and
It
that's
is,
something, and that's
yeah,
really, but that's something that we've talked about, right? That you're going to go from the hardware build out and then move to software. That's something that we've
yes.
spoken about numerous times, and I think that phase now maybe is pushed forward a lot faster because of this news with DeepSeek. So so then the news that we're seeing here, I mean, it sounds like a game changer if it in fact it's true in major ways, right? It could be a game. So for the inference part of this process, which you mentioned before, which we believe that could be this next phase. Do companies need to purchase chips to advance in the inferencing part of these LLMs or no? Or chips
No,
for
well,
the
you need hardware. So every time you ask like when you use Google, you ask a question, you're using their chips, right? You send a question to their data centers, it processes through their hardware, and then the answer gets sent back. Same thing with AI inference, the same exact process. So the theory is that uh, when you have billions of people asking questions all the time, and by the way, these new types of reasoning models, every time you ask a question, you're generating perhaps hundreds of other questions that it's asking itself to try to get back and answer your question. So the amount of inferencing that you need uh, it was thought to be maybe 10 to 1. I think that number is going up. The amount of inferencing hardware that you need to answer questions could be 20, maybe 20 times or more versus what you would need for the training. So it's a much, much greater market, but we think that's precisely why it's going to commoditize. No one's going to sit, no one, the world is not going to spend trillions of dollars and giving NVIDIA 80% gross margin on that trillions of dollars.
right.
That will not happen.
Okay, so Mark, so your belief is right. So margins will shrink, and I know we keep talking about Nvidia, but it is a large holding for many investors. And then, so what do you think though in terms of the sales as it relates to the H100 chips? Do you think that will slow down as a result of
Well,
this as
well,
well?
well, first of all, they're in a transition right now to Blackwell. So
Right.
the H100 should decrease just as a transition. And
Blackwell?
yeah, and now Blackwell, you also call the GB200. Blackwell's gonna be like a family of chips. Like the last one's called Hopper, and there was H100s and H200s, and DeepSeek had H800s that was made specifically for the
Right.
Chinese market to address the export of advanced technology concerns. So there's gonna be the Blackwell family, and they call it the first uh, big product coming out called the GB200, and that is so that's going to become their flagship product. And they have there's issues of them ramping that, and so those things actually might drive the stock more than anything else over the next 2 to 3 quarters. And we also last night, Microsoft's still committed to, big capex and others. But what we do believe is going to happen is that as things that we think their competitive barrier to entry is really on the training. That's where the CUDA software and their NVLink interconnect matter the most. We think we've already saw it this last summer. Meta put out their open source model, Llama 3, and it
Right.
runs not just on NVIDIA, but it runs on Samba Grok, Cerebras, often with much better price performance. So, and we're seeing increasingly, Amazon announced we're gonna make a cluster of 400,000 of our chips called Trainium. We're using that instead of NVIDIA. And why? We save a lot of money because we're not paying ourselves 80% gross margin, and we don't want all those dollars going on NVIDIA's balance sheet. So we think economic forces are forcing people to look at alternatives, and that's going to happen increasingly.
So Mark, so that we're not looking to make a buy and sell recommendation on this webinar. We're just trying to get a sense of your feeling about NVIDIA. So In your view, you're not too bullish on NVIDIA because of this DeepSeek and even your opinion about NVIDIA even before DeepSeek situation came to fruition. Would you agree with that?
I agree with that.
Right. Okay.
And
So,
and
so
and and it doesn't mean that we're going to have a 2000 to 2002, 70% down correction like you had with Cisco. It doesn't mean that that has to happen, but what it could mean is you're the number one market cap company in the world in 2024, and by 2028, maybe you're number five, maybe you're number seven. It might just mean you underperform the market or you market perform. But the idea that you can get in at 3.5, 4 trillion, and you're going to make another 10x. We think that idea is we don't think that's a possibility. Um, it's
got it.
we're not going to make that bet. And so we think people should consider that the easy money is mostly in the rearview mirror.
Right. So, Mark, so on the inferencing side of things, I know you mentioned Perplexity, which is a private company, and Grok and so forth. So, on the inferencing side of things, if that's the area that's now going to dominate, in addition to software, in addition to cloud businesses, which we'll talk about in a moment, but if inferences does dominate, is there any public companies that you can see performing well as a result of this transition to more inferencing?
It's a very good question. You know, I haven't really thought that through as much. Well, software companies, I think, are going to do very well because it's the more open source you have out there, the more software companies can innovate. When
Right.
it was, we go back like a year ago, you started seeing venture-backed modeling companies start to fall off because they're like, we can't keep up in this game of spending ever more amount of money. So companies like Inflection AI kind of blew up. So you were kind of there was Mistral in France, you had OpenAI and Anthropic at the private level, and everything else was done by hyperscalers, companies with tens of billions of dollars of free cash flow that they can afford to fund this big game. To the extent that we get very high quality foundational model out in the open source world, that's going to take the cost to people that use AI. It takes the cost down a lot, enables them to innovate at a much higher velocity, and that I think is going to be terrific for software companies that build new feature functionality to their software. And I think it's going to be great for the end users because their costs go down. But it's not necessarily good news for people that were used to making 80% gross margin and benefiting from scarcity. I think if you go to a world of multiple hardware vendors selling equipment at 50% gross margin instead of 80, and a lot of that new hardware has even better price performance than NVIDIA, and combined with very high quality models, it's amazing for the ecosystem.
I agree. I
But
agree with
it's
you.
but it but it's not going to be good for certain people's business models.
Yeah, no, I agree with you. I agree. I think this DeepSeek seems really interesting that it's just going to pull forward a lot of things, move things to applications, move things quicker to software companies. We've seen software hit a bid at the end of last year and even follow through this year. A lot of businesses that we own in our emerging growth portfolio has really performed well as a result of that. So just going to into data centers, right, which again is part of the build out with AI. So do we still or will we still need as many data centers as a result of what's going on?
Um, I think we're uh, in the end we may need more. If you make the costs lower, so it's easier to adopt and use, you're going to have like as I was telling you before, like the ratio of inference to training may go up because if I get the cost down, I can deploy. I can have a lot more demand. So just like Moore's law, uh, Moore's law, the compute always got cheaper, but the markets always grew faster, and so that the so we're the if the cost of compute came down by a factor of 1,000, the amount of compute used went up by a factor of 10,000 and the industry grew 10x, right?
Which is really interesting about that.
That sort of thing may very well happen here. But and so I think now will the power demands be the same, or will there be you may spend a lot on the data centers and the equipment, but maybe I think we're going to see big improvements in the equipment and how and the power it needs to get the same number to answer the same number of questions. Can we drive power down by an enormous amount per question? That's definitely in the works. So it's not. So I think we're the pace at which we thought we were going to need power and data centers may slow somewhat as we don't need to keep 10xing the size of the clusters to train. That may slow in the near term to the extent that we produce these really great models at low prices that enable all this innovation. The inference demand eventually should swamp that of the training demand. But we're still in a world today, like 40–50% of NVIDIA's revenue is inference, meaning it's NVIDIA's revenue is still training dominated. So we haven't seen that big inferencing thing happen yet. So I don't want to say it's all going to happen next year or this year and that we're still in the same ramp. We may see a pause before a much larger adoption wave because AI got a lot more efficient. The efficiency of AI in terms of unit of intelligence per unit of cost, if it gets a lot better, ultimately that's going to breed enormous demand,
Yeah,
more than we were thinking maybe a year ago.
yeah, which I believe is going to happen. And so, actually, utilities, Entergy is a business that we own in our portfolios on the core side of things, and actually rallied pretty nicely over the past couple of days. So it looks like that rebounded, which is nice. So I
Yes.
feel like data centers may still be needed and still be built out.
Oh,
So,
yes.
but anybody who's listening to this call, if you do have a question, you could put your question in the chat, and I'll be more than happy to ask Mark the question that you have. So the last part I just want to go over is the cloud piece of this. So the part of Google, Amazon, and Microsoft. So the part of their business that seems to be really growing and contributing is the cloud businesses. That seems to be where the growth now. With the growth may slow inside of 31%. I think Microsoft's was 30%, and all of a sudden analysts get all worked up with investors over that. So tell us about and then I'm going to answer this question from Ravi. But before I do that, so tell me about the cloud business and what you think it means to what's going on today.
Well, I think a lot. Microsoft got hit. The general perception of Microsoft got hit today because their non-AI cloud business wasn't as good as people had hoped, and I'm not sure I fully understand the whys of it yet. And it's I want to re-listen to the call, see if I missed something. But ultimately, I think it's going to in a world where you have lots of AI agents out there. Uh, to me, I look as an AI agent as an additional worker. And so today, I access the legacy infrastructure, relational databases running on Intel servers, running apps. Uh, if you have more AI agents asking questions and trying to access and pull data from those applications, ultimately, I think that should stimulate demand there. I think
Right, I
we should
agree.
see a traditional IT, I think should see an uptick.
I agree with that.
If you have 10x the number of digital workers accessing the same legacy applications, don't you need more of them? Don't you need more servers to support that? I think that's going to happen. But again, we're early. We're in the everyone's still playing with it. Agents are just starting to get deployed. We don't yet have, for each worker, 10 agents working yet. We're nowhere close to that. It may happen pretty quickly, but it would still take, a couple of years till you had a world of, for every one human organic knowledge worker, we have 10 digital ones. That has not happened yet. So, but it could, and it could be a great opportunity for stocks that are on the old IT.
Mark, what's really interesting about this is, when we talked about this, right, we all said, okay, there's a tremendous build out in CapEx spending since the announcement of ChatGPT a couple of years ago, right? And we all knew that, and a lot of these businesses, especially in Mag Sev, they were trading at very high multiples, specifically Nvidia as well. And we all knew that there was going to become a day where the landscape was going to change, right? But would you have ever thought that there would be this company in China called DeepSeek that would train their models in 2 months and spend significantly less. Like, that was like the exogenous shock to this AI situation that has developed. Now, whether this continues or not, or if it's real or not real, I mean, I do believe it's real. It's anyone's guess. But it's really interesting how markets work and
Yep.
how the world
And
works.
and I think what people need to realize that this was like it was going to happen. And whether it was China or us, someone was going to do this. And I think it's because it was not sustainable that we just kept throwing in dollars at it at a 10x rate, right? It's I, I remember seeing some video about like, the cost of a fighter jet over time. If you extrapolated it by the year 2050, one fighter jet would be the cost of the United States economy. The United States is not going to spend our whole economy on one fighter jet. Can't happen. So, and I think we got a little bit, spoiled with, well, we're just going to keep 10xing the model size and spending, even though there's improvements in the NVIDIA chips, that means a 2 to 3x in AI hardware spend every year. Compounding, that would never happen. And surprisingly, certain people even thought, oh yeah, the hyperscalers will take their free cash to zero to stay in that race. I don't think that was ever really in the cards. It's they have an obligation to make their stocks go up. Taking your free cash to zero, I don't think is anything anyone can realistically do. So I
I
just think it
agree.
was this sort of innovation was going to happen, and
Yeah.
the reason it may be happening in China first was because we made it harder for them to get the hardware, so to force them to focus on things to get efficiencies based on even if they got H100s, they were never going to get the same quantity that we had. And I think everyone in government knew it. It's like we can only slow them down. We can't stop them. So that forced them in this direction. But you already had, I think, like people at Berkeley have already started, playing with these techniques and are already seeing really great results of it. But I like is that we had the talent, we had the smart people. We were just so focused on scaling that maybe we didn't try these things first, but they were always going to happen. It's just the timing and where it happened was the thing that may have caught people by surprise.
I
But
agree.
I don't think we should feel like this is it, it's the end of the world. China's going to take over. We lost to the CCP. Not the case at all. In fact, this is really good. If we can move AI forward without spending, wastefully spending, that's good.
I agree. I
We
agree.
want better returns on invested capital. If this is the pathway to do it, fantastic. And we could save a lot of money, get cheaper AI, get better apps. All that's great.
I agree. I agree. I love it, and I want to end on that note. So before I end, though, I want to open it up for Q&A. Again, if you want to ask a question in the chat, just type in your question, and I'll tell Mark the question. So I'll leave a quick minute to be able to do that. Any thoughts on Palantir?
Um, Palantir, not cheap, but they are. We think in many ways, what they've always said is the value add is going to be by people that really understand how to assemble applications and how to automate processes with the AI, and that the things underneath it, the models and the chips, were the value is going to be at the application layer. We think they've to a large extent have been vindicated. We do think as their percent of revenue that's AI driven, we don't actually have a hard number, but of the public companies out there, they'll probably have the most AI revenue uh, at kind of what I'll call the application software layer, and that has attracted a lot of investors because there's kind of scarcity there. Companies like ServiceNow and Salesforce, I think they're going to do great things with AI, but I think and Microsoft's obviously doing a lot with AI, but I think their percent of their total revenue that's AI is, I believe, less than Palantir. But I don't have hard numbers. I don't want to make representation just from the pace at which their corporate business has really taken off, and given that the size of it versus their total revenue stream, I believe that they have the highest percentage out there, and it's attracted a lot of investors. But it's got a very high multiple. So it's doesn't mean you can't make money owning it here, but the multiple is going to create some headwinds for it. But but again, I think their view of the world is being vindicated. We think the model layer and the chip layer are their piece of the value add pie is going to start coming down.
Yeah, I mean, Palantir's it's a great business. I mean, I think the CEO is, one of the elite out there, right? And I mean, it
Yeah.
is expensive. We spoke about that, but they get some great contracts with
Yes.
R&D, and I think that'll only continue. They did a great job with AI and making money, getting a return on their
Yeah.
investment.
Yep.
So yeah, so I think I like it a lot. So if you have a question again under the Q&A box, that's where you can click and ask any additional questions. I'll give it one more minute, and then we'll wrap up. Okay, Mark? And thanks
Sure.
for your time today, Mark. I appreciate it. You did a great job as always.
Oh, my
Let's
pleasure.
give it one more minute. All right, I think we're good. All right, Mark, listen, thank you. And first of all, thank everybody for attending today. I appreciate it. Hopefully this was helpful and educational. That's what I'm trying to deliver to you, to really give you a sense of what's going on, trying to break down the most complicated piece of this, or the complicated parts of this, break it down in most simplistic format so you can really grasp exactly what's going on. It's not easy to do, and I always try to tell Mark, who's extremely smart in this area and knows his stuff inside and out, sometimes it's difficult to make the complicated and make it simple, but that's my goal, so we could all make educated decisions on our investments. So any other questions anyone has, you could reach out to me, call me, or email me. We have direct access to Mark. If you remember, Mark manages 50% of our emerging growth strategy, the Palumbo Emerging Growth Portfolio. He covers the technology piece. We always have access to him, which is a great resource to the firm. So Marc Weiss, thanks again. I really appreciate your time today. You were excellent as always. And thank everybody. And I hope everybody has a great day.